What if wealth is built quietly through habits nobody talks about daily? Many people chase quick money, but real wealth grows slowly and silently. Millionaires rarely depend on luck, sudden opportunities, or overnight success. Instead, they build consistent financial habits that compound over decades. These habits appear small daily, but produce massive results over time. The first habit begins with controlling money before money controls you. Wealth builders understand every dollar must have a clear purpose. They plan spending intentionally rather than reacting emotionally to purchases. This habit transforms money from chaos into a structured financial system. Many people spend first and save whatever remains afterward. Wealth builders reverse that pattern by saving before spending anything. This strategy ensures financial growth happens automatically every single month. Even small savings accumulate powerfully through consistent, disciplined repetition. Another habit involves tracking where every dollar flows each month. Awareness alone often reveals surprising patterns of unnecessary spending. Once waste becomes visible, smart decisions begin replacing careless habits. Wealth builders treat budgets as tools of freedom rather than restrictions. A well-designed budget directs money toward long-term priorities and goals. Without direction, income disappears into countless unnoticed daily expenses. Another critical habit involves avoiding lifestyle inflation after income increases. Many people upgrade lifestyles immediately whenever earnings grow slightly higher. Wealth builders resist this temptation and maintain disciplined spending levels. The difference between income and spending becomes powerful investment capital. This surplus money becomes the engine driving future financial independence. Another essential habit involves building emergency savings before major investments. Unexpected expenses can destroy financial plans without proper preparation. Emergency funds protect long-term investments from sudden financial shocks. Wealth builders usually store several months of expenses safely aside. This financial cushion provides confidence during uncertain economic situations. Confidence prevents panic decisions during market fluctuations or economic downturns. Another powerful habit involves learning continuously about money and investing. Financial education strengthens decision-making and reduces costly mistakes dramatically. Wealth builders read books, study markets, and analyze economic trends. Knowledge gradually transforms uncertainty into strategic financial confidence. Many successful investors dedicate time weekly to expanding financial understanding. They treat learning as an investment with lifelong financial returns. Another difference involves thinking long-term instead of chasing quick profits. Short-term thinking often leads to risky decisions and emotional reactions. Wealth builders prefer steady growth that compounds gradually over years. Patience becomes one of the most powerful tools in finance. Time multiplies disciplined habits in ways most people underestimate. This compounding effect quietly turns small actions into large fortunes. Outsiders often notice wealth but rarely observe the habits behind it. These habits form the invisible structure supporting long-term financial success. And everything begins with mastering the daily discipline of money. Wealth builders understand saving alone is not enough to build fortune. Money must work continuously instead of sitting idle in accounts. Investing transforms savings into engines that generate future financial growth. The most powerful investing habit is consistency, not perfect timing. Many beginners wait endlessly for the perfect moment to invest money. Wealth builders know perfect timing rarely exists in real markets, therefore they invest regularly regardless of temporary market conditions. This strategy spreads risk across different times and market cycles. Consistency removes emotional decision-making from the investment process. Another powerful habit involves understanding the magic of compounding. Compounding allows investments to grow faster as profits generate new profits. Over many years, this effect dramatically multiplies original investment amounts. Small investments can eventually grow into large financial assets. The earlier someone begins investing, the stronger compounding becomes. Wealth builders therefore start investing as early as possible. Another habit involves diversifying investments to reduce unnecessary risks. They rarely place all money into one single investment opportunity. Instead, they spread investments across multiple assets and industries. Diversification protects wealth when certain markets experience sudden declines. Balanced portfolios provide stability during unpredictable economic situations. Wealth builders also avoid emotional reactions during market volatility. Fear and excitement often lead investors to make costly mistakes. Successful investors stay calm when markets temporarily decline. They trust long-term strategies rather than reacting to short-term noise. Another important habit involves reinvesting profits instead of spending them. Reinvesting accelerates the compounding effect significantly over time. Dividends, profits, and returns continue generating additional financial growth. Wealth builders see profits as seeds for future opportunities. Every reinvested dollar strengthens the entire financial system they build. Another difference lies in focusing on assets rather than liabilities. Assets generate income or increase value over time. Liabilities often consume money without providing financial returns. Wealth builders prioritize purchasing assets whenever possible. Over time, assets begin producing passive income streams. Passive income reduces dependence on active work for money. This shift gradually increases financial freedom and personal flexibility. Many wealthy individuals own businesses, stocks, or real estate assets. These investments generate income even when they are not working. Eventually, investments begin supporting entire lifestyles independently. This stage represents a major milestone toward financial independence. However, reaching it requires years of patience and discipline. Consistency always matters more than occasional large investments. Small steps repeated regularly create powerful long-term momentum. This disciplined approach transforms ordinary incomes into extraordinary wealth, and it all begins with consistent investing habits. Wealth builders know earning money matters less than managing it wisely. Many high-income earners remain poor due to uncontrolled spending habits. Financial discipline separates wealth creators from constant financial strugglers. The first rule involves spending less than you consistently earn. This simple principle forms the foundation of all financial success. Without this habit, even large incomes disappear quickly. Wealth builders constantly evaluate purchases before committing their money. They ask whether a purchase creates value or temporary satisfaction. This mindset prevents impulsive spending driven by emotions. Another powerful habit involves delaying non-essential purchases intentionally. Waiting often reveals whether something is truly necessary. Many impulses disappear when given time for rational thinking. This practice protects finances from unnecessary financial pressure. Wealth builders also focus strongly on value, rather than price alone. Cheap purchases often cost more long-term due to poor quality. Therefore, they prefer quality investments that last longer. Smart spending becomes an investment rather than simple consumption. Another important habit involves eliminating high-interest debt aggressively. Debt interest quietly drains financial resources over long periods. Wealth builders prioritize paying off expensive debts quickly. Once debts disappear, more income becomes available for investments. This shift accelerates financial progress significantly. Another discipline involves separating wants from genuine needs. Marketing constantly encourages people to confuse desires with necessities. Wealth builders stay aware of this psychological pressure. Conscious spending decisions protect financial stability and long-term goals. Another habit involves setting clear financial goals regularly. Goals create direction for saving, investing, and spending decisions. Without goals, money flows randomly without building meaningful progress. Wealth builders define targets such as investments, savings, and assets. These targets motivate consistent financial discipline daily. Progress tracking becomes another powerful motivating factor. Seeing financial growth encourages stronger commitment to good habits. Many successful individuals review finances weekly or monthly. This regular review reveals opportunities to improve financial strategies. Over time, disciplined habits become automatic financial behavior. Financial discipline gradually transforms ordinary earners into investors. Investors think strategically rather than emotionally about money. This shift represents a major step toward long-term wealth. Eventually, disciplined spending produces large financial surpluses. Those surpluses become investments that generate future wealth. Small, disciplined choices accumulate into massive financial advantages. Outsiders often overlook the discipline behind financial success. Yet discipline quietly drives every strong financial foundation, and controlling spending remains one of the strongest wealth-building habits. The greatest financial habit involves thinking decades ahead rather than months. Wealth builders plan financial strategies around long-term visions. Short-term thinking often leads to risky and emotional financial decisions. Long-term thinking encourages patience and strategic investment behavior. Patience becomes one of the most valuable financial advantages. Many investors fail simply because they expect results too quickly. Wealth builders trust the gradual process of financial growth. They understand wealth rarely appears suddenly or accidentally. Instead, it grows steadily through years of disciplined financial behavior. Another mindset involves embracing calculated risks thoughtfully. Avoiding all risks prevents meaningful financial progress entirely. However, reckless risks can destroy years of financial effort. Wealth builders carefully study opportunities before committing investments. Knowledge and preparation guide their financial risk decisions. Another powerful habit involves building multiple income streams. Relying on one income source creates financial vulnerability. Additional income streams provide security during economic uncertainty. Many wealthy individuals build businesses, investments, or side ventures. Each income source strengthens overall financial stability. Another mindset involves valuing financial independence more than luxury spending. Temporary luxury rarely creates lasting happiness or financial stability. Freedom from financial stress provides deeper long-term satisfaction. Wealth builders therefore prioritize independence over immediate gratification. This mindset shapes every major financial decision they make. Another powerful habit involves surrounding themselves with financially responsible people. Environments strongly influence attitudes toward money and discipline. Positive financial communities encourage growth and smart decisions. Negative influences often promote careless spending and risky behavior. Wealth builders intentionally choose environments supporting financial success. Mentors also play important roles in financial growth. Learning from experienced investors accelerates financial understanding significantly. Mentorship reduces mistakes that beginners commonly make. Over time, knowledge gained becomes powerful financial leverage. Wealth builders also remember that money reflects value created. Creating value for others often generates the greatest financial rewards. Businesses, innovations, and services frequently produce massive wealth opportunities. Those opportunities reward patience, discipline, and long-term thinking. Eventually, financial systems begin working independently for their owners. Investments, businesses, and assets produce income automatically. This stage represents true financial independence. Achieving it requires years of disciplined financial habits. Yet anyone willing to learn and apply these habits can succeed. Wealth begins quietly through small daily financial decisions. Those decisions gradually transform ordinary lives into extraordinary financial stories. And long-term wealth ultimately grows from disciplined habits repeated consistently.